Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. And you always see these videos of people saying, oh my god, housing crash and housing crisis, with these stupid thumbnails that says, oh, the housing is plummeting and this and that. But we're going to go ahead and answer that question. Is it really? Okay, is the cancellation rate really as high as they say it is? What's normal? What has previously happened in housing crashes? And we're going to go ahead and talk about that. But there is one thing that we're going to talk about, because in the world of real estate, what you have to do is you have to go ahead and take a couple of associating factors to kind of see where you're going to go ahead and put your business in the next quarter, in the next year, in the next 2 years, in the next 5 years, to kind of see where we're going to go. Because when it comes to housing, everything's kind of like a trickle effect, and then before you know it, it's like a 2-year in period versus a 2 to 3 year out period. What that means is, like, whenever you have anything that has something to do with housing, because it's one of the biggest markets out there, the most expensive things that you have that you're going to go ahead and buy and sell, and whatever it is the biggest purchase you will without a doubt will make your whole entire life. It takes a little bit of time for it to kind of catch up. So like if delinquencies happen, by the time anybody knows anything is going to happen with delinquencies, it's going to be probably about 6 months to a year. At the bare minimum will be 6 months. Typically will be about the 12-month to 18-month mark. But let's go ahead and go on with the mortgage rate update. The mortgage rate update is going to be at 8/2/2022, so we got a fresh month. All loans have been zeroed out, and interest rates have increased. So a 30-year fix will be sitting at 4.50%. 15-year fix will be sitting at 3.72%. A 30-year jumbo will be sitting at 4.95%. DSCR loan, and for those of you who don't know what a debt service covered ratio loan, a DSCR loan is one of those loan products where we do not calculate your total income at all. Like, there's no W-2s, there's no pay stubs, there's no nothing. This is mainly for investor loans where people are trying to get into the rental side of things. Now this will go ahead and qualify the total amount that's coming in for rental, and then it's going to go ahead and take a ratio versus how much principal, interest, tax, and insurance you have. For instance, if your mortgage is at $1,000 and then your total rental income you got coming in is $1,000, then your ratio is going to be at 1%. So that's the debt service covered ratio. The debt is your mortgage, your servicing is going to be the rental income, and then whatever is the covered ratio. Bank statement loan, this is another one of those non-qualified mortgage products where we don't really care about too much about your W-2s. We don't care about any of that stuff. The only thing we really care about is your bank statements and your credit report. Your bank statements is going to be how much money you have coming in versus the liabilities that you have coming out, and then we'll do a 50% ratio on that. If you guys want a better explanation of bank statement loans or DSCR loans, I'll go ahead and put the links up here in a second. FHA 30-year fix will be sitting at 3.6%. 7/6 adjustable rate mortgage will be fixed interest only for 7 years. Then it gets adjusted every 6 months according to the rate and the cap on your product. Will be sitting at 4.55%. USDA 30-year fix will be sitting at 3.85%. That is one of those zero down payment loan programs. VA 30-year fix will be sitting at 3.99%. That's another one of those zero down payment programs for people who served in the military, and there's spouses, and there's other parameters that you can go ahead and qualify to get yourself into the VA program. And then hard money fix and flips, these are for people who want to buy distressed properties, and then you want to go ahead and flip them and then make a profit, or you want to go ahead and refinance out of it, hold it, and then just rent it out, whatever you want to do. So if interested in any one of those mortgaging products, up to 0% listing on selling your current home, 50% commission rebate on purchasing your next home, or any one of these mortgaging products and any other that you have in question, link in the description below. Let me help you out. I know my rates are pretty good, but you never know. Just go ahead and shoot me a message, DM me, and I'll go ahead and help you out the best that I can. So let's get on with the cancellation rate. So first of all, let me go ahead and tell you what a cancellation rate is. A cancellation rate is the amount of people that go into contracts for any type of home, and then they go ahead and for whatever reason, whether there's an escalation clause that didn't get accepted into it, whether there's some sort of whatever it might be, inspections didn't go accordingly, maybe it was an FHA loan and there was an amendatory clause. Well, the FHA loans do have amendatory clauses, and that didn't go, it didn't appraise correctly. So who knows what the cancellation rate is. So you see all these people who go ahead and dump these videos that say, oh my god, the cancellation rate. Well, let's go ahead and see what the cancellation rate actually is. So DR Horton, okay, on Thursday, because the Q2 earnings actually came out, Q2 we're in the halfway through the year now. Quarter two, D.R. Horton, which is one of the biggest, if not the biggest home builder developer in the United States, they said the cancellation rate in the most recent quarter was up 24%. Now 24% seems a little high from 17% from the last quarter, which that seems a little bit high, but in actuality, it's really not that. It was the company's highest cancellation rate since the first quarter of the fiscal year of 2019, which in essence is not really that bad. Is because in 2019, we were having a normal home, like the home purchasing, buying, selling, all that was normal. It wasn't that bad. So to understand everything, what is the normal cancellation rate? The normal cancellation rate is somewhere between, let's say, 15 and 18%. That's just a normal thing, because what happens is people lose their jobs. The people go ahead and they move. They decide that they don't want to do it anymore, or they don't want to wait, because especially in the last couple of years, I'm not sure exactly why the cancellation rate hasn't been a lot higher than it is. I actually don't even understand. I've been doing this for 20 something years, going on 21 years, being in the real estate business, and I still don't know what the fuck is going on for the past 2 years. It makes absolutely no sense, other than people were just buying low interest rates, but you're still paying at a premium, so what difference does it make? You paid 3 times more than what you were supposed to pay on a home, but you're like, hey, I got a 2.25% interest rate, so I'm a happy camper. Way to go. You're doing really good, and I'm one of those assholes that are doing really good, and I had no choice. Don't judge me on this. But what we're going to go ahead and see, so if you could go ahead and look at the cancellation rate. So in 2021, in 2021, the cancellation rate for D.R. Horton was at 15.4%, which was at the peak of the total housing bubble, right? Or not bubble, but this whole entire buying craze that we've had. Now, as you could go and you could see, 2021 all the way up there, KB Homes, they were only up by 1%. Toll Brothers was up by 1%. Hovnanian Enterprises, they were actually down by 1%. Now these are all preliminary reports. Now compare that for cancellation rate from all of those to quarter one. Now D.R. Horton, they only went up by 1% in quarter one. Of course, it was 24% in quarter two, which is still not that bad because of how low everything was. And then supply chain issues, apparently that's still a thing, even though lumber is decreasing dramatically. Pulte Homes, they're only up 1%. Now, whenever you have a high housing buying frenzy, which we did, it was nuts. It was absolutely crazy. Now the question is where do these builders see themselves sitting at? Now, one of the biggest companies out there, which is the National Association of Home Builders, the CEO of it, he actually had a few things to say, which was actually surprising. So I'm going to go ahead and let you listen on to exactly what he said, so we could kind of make sense of this whole situation, so we could plan for you to go ahead and plan on what you're going to do. Are you going to buy now? Are you going to buy later? Are you investing now? What are you going to do? But let's listen to what he has to say, and then we can go ahead and go from there.
Is that it looks like we're heading into a housing recession, and if that is indeed the case, it doesn't bode well for the economy as a whole. There's still some hope that things can turn around, but we're getting more and more pessimistic to hold off. In fact, when I travel the country and talk to builders, a lot of them are starting to get very cautious about whether they're going to break down. That's particularly true in the spec market, but it's also true in the market where they are negotiating with customers for sales right now, because at the same time as we're seeing inflation on the mortgage rates and interest, we're also seeing increases in construction costs that are really throwing the market off. What I'm really worried about is, historically, housing has led us into every recession since World War II, but it's also led us out of every recession since World War II. Right now, with the supply shortage we have, with the fact that we're getting hit at both ends of the pipeline, cost of construction and then cost of loans, I don't know that we'd be able to lead us out of a recession. I think that this is a potentially dangerous situation.
I'm wondering.
Now to piggyback off what he said, you know, he did say majority of the recessions that we have is always caused by a home bubble or a housing recession, but the housing also pulls us out of it, and he doesn't see that that's going to be the case. Now there's a lot of other factors, the cancellation rates. People have gotten so used to the past 2 years where the cancellation rates were so low because interest rates were low and we could approve people. Now that's another thing that happens with cancellation rates, and we are going to have 3 more interest rate hikes. So get this right, 3 more interest rate hikes. Now I know in previous videos I said there's not a direct correlation between the Fed's increasing interest rates versus mortgage interest rates, but there is. It's direct and indirect, which means that the interest rates that the Feds are gonna hit us here coming up soon, it's gonna affect mortgaging rates, because that rate is going to be the amount that they're gonna charge from one bank to another bank to go ahead and buy and sell that money. Now, if they increase it, which is going to be probably another 75 basis points to 100 basis points, they're going to go ahead and have to adjust it, because we just can't, we're not making any money based off of these after your total overhead, you know, the paying everybody out, all that good jazz, because that's within bank to bank. Then when you're selling it to the consumer, then you have a bunch of these other operating costs that you have to go ahead and do, and then we're going to have to see how much it's actually going to be at the final product. Now, DR Horton, to go back to it, DR Horton, their normal cancellation rate is between 16 to 20%. Well, God bless it, Cookie. We are at 16%, 24% on the high side right now, but on average, we're actually low. For the past 2 years, if we do the average, we're actually on the lower end of things. Now, this might actually uptick everything coming here in the slow season, October, November, December. Now, what is really, really bad? What is a terrible situation to be in? Well, let's go ahead and see. The Horton's cancellation rate was close to 50% for a couple of quarters back in 2007, 2008. So we're nowhere near that at all. So to see if the cancellation rate is really that big of a deal, if it's really going to we're going to keep a close eye on that. If you want to go ahead and see where it's at, I'll go ahead and keep digging, because this is what we do. We have an analytics company that we work with, and we go ahead and try to see where we're going to be at in the next couple of years. But the one thing I didn't understand is unemployment rate versus job openings. This one didn't make sense, because as a whole we have to see what jobs are opening, what markets are going to be in flux, so then we could go ahead and market ourselves to whoever those people are, depending on, you know, what their qualifying income is. Like for instance, cybersecurity. If you are looking for a job and you are looking for a career, get into cybersecurity. They're going to be ramping up about 350% total volume in hiring from now until 2035. And cybersecurity is one of those big, like I'm not going to tell you exactly how much they make, because I'm sure that everybody is different, but in cybersecurity they make a ton of money for the lowest amount of education that you could possibly need. Like 4-year degree and you're going to clear $250,000 a year. Cybersecurity, look into that. But we have total 11.494 million jobs available. It's a lot of jobs. That typically means, oh man, we unemployed a lot of people because, you know, everything is going down. But then we look at the United States unemployment rate, it's 3.6%. Well, that's a little interesting. Total unemployed people, 5.9 million people that are total unemployed. Well, let's look at California. Unemployment rate in California is 4.2%, which is 819,000 total people. That was updated as June. Now, whenever I'm looking at this is the part that doesn't make sense. So you have to go ahead and ask yourself, well, who is actually getting these jobs? Where's these opening? Where's the opening in jobs at? Nothing that we really want to do, because that we're really concerned about, because majority of these jobs that are open right now. So get this, they have the most amount of jobs open from companies between 1,000 and 4,999 employees, and that's in June. They added the most jobs, but they also decreased the amount of hiring June 2022. So where are these jobs? Are these just fake? Are these just weird fake numbers? Because if unemployment is down, the job market is up. And those job market, it's not going to be for like, you know, high level professionals, for educated people. It's going to be like, you know, more for just, it almost seems just for like show in the business sector, but not in the regular business sector, as far as, you know, if you're selling some sort of, if you're in the engineering side of things where you're selling bearings, or you're selling some sort of, you know, micro chip, or whatever you're selling. It's not one of those. So we're not marketing to that company. We're not marketing to the tech people, because tech has a hiring freeze, which we're in California. Tech is one of our biggest guys. So where are these jobs coming from? Now, I'm gonna go ahead and do a little bit more digging on this to kind of figure out exactly what's going on with the total housing numbers. Now, the brief like overview that I did do, majority of them are bullshit jobs. They're like, you know, I mean, no offense to anybody, I don't mean bullshit jobs, okay? I mean that there's like, you know, low-end jobs that are like, you know, entry level, not for people who have you know, went and got an engineering degree or a doctorate degree or whatever it is, some sort of, you know, coding degree or whatever it is. Like, you know, somebody who has very bare minimum education, it's mainly for those. Cybersecurity, please look into it, try that. It's super chill job. Everybody, like my buddy who does cybersecurity, he does nothing and he is killing the game. I swear to God, he gets up in his pajamas, he goes on his computer for a little bit, and then we head on over to the bar, and he's always buying. God bless him. He's a great friend. I gotta make sure that I keep that guy. You know what? I'm gonna send him a bottle of tequila. But that's going to be your mortgage rate update. So for up to 50% commission rebate, 0% listing on selling your current home, or any mortgage assistance, link in the description below. Until next video, guys, I really appreciate you watching. Like, subscribe, comment, all that. Peace.
I don't wanna waste a minute. Don't have any plans, bring it.